This video is called The Growing Problem with Personal Finance YouTube Influencers.
I have some bad news for you. You are probably not going to be rich. Not a particularly positive message to start a video on, but it's something that people need to hear from time to time. Unfortunately, this is not something that most people want to hear, so there is no shortage of people out there telling you exactly the opposite, normally as a way to pitch some kind of product. Now, of course, most of you watching know that YouTube ads saying that you can earn 6 figures a month by selling on Amazon, forex trading, or flipping real estate are full of shit. But they still all follow a pretty similar routine. Hey, you can get rich, as long as you are willing to do XYZ, while listening to the advice I give you. Again, when it turns out that this advice is something that you have to pay for, most people get wise to the fact that it's all just a massive scam.
Which is one of the reasons why I try my best to make my YouTube videos, every single one. I go live twice a day, every day. Why I try to make all of them as useful or even better than any paid course out there. You can come, you can watch, you can listen, you can ask questions. And of course, you can always follow along with my trades if you choose to, but you don't have to pay us anything over at Outlier. But what we do want is for you to learn, for you to take notes, and if it's helping you in some way, tell everyone you know. Right? So that's why I really try to over deliver on everything that I do for you. I want this to be the best finance channel that you've ever seen.
Of course, some don't, which is tragic, and there really genuinely should be more done about this, but that's a story for another time, or a CoffeeZilla video. Instead, the focus of this video will be on a group of internet gurus with much more influence, a much larger following, and much more credibility. The personal finance personalities. So, it's time to learn how money works and find out why you probably shouldn't be learning to work your money like these popular YouTubers might suggest. Now, I want to preface this by saying that I personally enjoy watching people like Graham Stephan, Andre Zick, and from time to time even Dave Ramsey as a guilty pleasure. None of these guys are outright nefarious scammers, like the hustle bros you'll see pitching an Amazon automation course, and this automatically makes them a million times better than this other group. What's more is that they are genuinely entertaining. They give people a sneak peek into their own success while presenting relatively dry content in a way that is funny and easy to understand. The problem is, though, is that personal finance should be boring. There is a common...
And I agree with that. But if, in our world, we talk about trading. I say this all the time. Trading should be boring. If trading is exciting to you, you're doing it wrong. You're doing it wrong. In fact, one of my slides I talk about whenever I put on trades, let me show you the slide real quick, is, where's it at? It's right here. There's no expectations when I put on a trade. I am the last person you will see buy these 3 stocks and be a millionaire in 2025. I just covered that video a minute ago, by the way. So be sure you go watch that one. But you shouldn't have any expectations in a trade. You shouldn't have any profit targets. You shouldn't say, I'm going to buy this stock today. My bullish case by the end of the year is it's up $1,000, right? When you do that, you anchor yourself emotionally to a certain price target. And if that price target's not hit, what are you going to do? Are you going to just hold it and hope and pray that one day it does hit your price target? Your price target's meaningless. No one cares about your price target. What you should be doing, on the other hand, is coming up with your own plan, which is what I try and tell everybody. Have that personal accountability to come up with your own trading plan. And when people ask me all the time, should I get in or out of this? The first thing I say to them is, what's your plan? Where did you plan to get out? I can't tell you what to do. I can give you some ideas of what works, some timeless principles in the market, but I can't tell you what to do. That's up to you. So there are no expectations in any trade that I put on because I don't know what's going to happen. I don't have any profit targets because I don't know how much I'm going to make. I could either make a lot, I could make a little, I could make a break even, or I could have a small loss, but I will certainly never take a big loss. You're probably thinking, well, how do you know you'll never take a big loss? Because I won't let it happen. Because I have a plan to get out when one of my exit signals happens. These are my exit signals here. Feel free to copy them. These are my exit signals. And in fact, Richard Dennis, I think I have the quote over here. One of the greatest traders of all time said, I always say I could publish rules in a newspaper and nobody would follow them. The key is consistency and discipline, right? I can tell you everything that I do, but I'm not telling you have to follow them. But if you do, you need to come up with your own plan and follow that with consistency and discipline. So yeah, I agree completely. It should be boring. There should not be anything exciting about finance.
Saying that everything you need to know about personal finance should be able to fit on a postcard, and some authors have actually done it. But when you are committing to an upload schedule of 15-minute videos every single day, every single week, you are going to run out of things on that postcard to talk about. Now, this is no good, because as these people will show you, they make millions of dollars a year from their daily videos, so they are not exactly going to turn around and say, oh well,
Let me give you just a little tiny bit of perspective here, since we're calling out how much people make on their YouTube videos here. Let's go to the Outlier channel, and we'll show you just exactly how many millions of dollars we're making over on the Outlier channel. Hang on, I'm clicking around here. Go to Analytics Studio. There we go. So this is the Outlier channel. This is our analytics. And we'll go to the revenue tab. Wow. In the last 28 days, we made $262. Wow. That's like 12 bucks, 13, 9, 8, 5. This is not how we're making money here. But I appreciate the call out. I appreciate the ability to be a little transparent with you.
taught you everything you need to know. So long, and thanks for all the fish. Of course not. That would be silly. And I'm sure any one of us in their position would do the exact same thing that they are, which is riding that damn gravy train for as long as they can. But to do this, they need to create more and more content than what this postcard can hold. So they branch out into a few different broad categories: personal stories about their success, reactions, predictions, and making.
Okay, I do lots of reactions because I'll tell you what, having a reaction style like this allows us to talk about different topics I wouldn't think of otherwise. So I love reaction videos. I think this is where content should be right now. It is super handy. Personal success stories, I've made money, I've lost money, but I do like to share stories that help you achieve your goals, right? About how like I lost $200,000 selling options. Probably not the success story you'd want to hear, but because of that, because of losing as bad as I did, it allowed me to figure out, hey, you know what? Maybe I shouldn't do that anymore. Although it took me way too long to find out. Predictions, I don't do any predictions. Making stuff up, yeah, I might make some stuff up every now and then.
Up new lessons. Now, to start off with, let's look at the least problematic of these formats: reaction videos. Reaction videos are everywhere on YouTube, and they get a bit of a bad rap. But when you think about it, this video format can range from absolutely terrible all the way to genuinely value-adding and informative. The videos that people like Ram or Kevin make are normally towards the good end. They will normally react to personal finance by watching video series like Millennial Money, or they talk about high-end real estate, which is obviously an area of expertise for these guys. There are others like Dave Ramsey, who will do live reactions to people that call into his show, and despite this being a bit repetitive, they aren't really doing any harm. If you want to argue that these live interviews are not really reaction videos, just think to yourself, am I watching this to see a solution to the person's problem, or am I watching this video to smugly partake in Dave's reaction to this person's situation? Even still, this is just a bit of light entertainment, and who knows, maybe we'll pick up a nugget of information along the way. No problems there, apart from when these reactions turn into predictions. Financial predictions are almost impossible to make. Even the largest financial firms in the world with teams of PhD quantitative analysts struggle to outperform regular market returns consistently, if at all. It's therefore frustrating to see someone like me, Kevin, make predictions about the future of a highly volatile stock like Tesla before his audience. And yes, I know, he gives a standard disclaimer that this is not financial advice.
Don't sue me, bro.
But when a supposedly reputable figure that positions themselves as a personal finance expert brings up an official-looking spreadsheet and predicts 100% growth within the next 12 months, well, it's not
And that's something I complain about all the time in our reaction videos, is why are we making these predictions? How can you have whatever case that you want? Your prediction is absolutely meaningless in the scope of things. But people are going to watch that and say, well, Chris predicted that it's going to go up 54%. Chris predicted a $1,000 price target. I should definitely buy that. No. No. In fact, I completely agree with this, hands down, full stop. Because I really am adamantly against predictions. Don't predict anything. Just react to them, what the market is telling you. And sometimes it's telling you, hey, this is a great stock, let's go. And sometimes it's telling you, now may not be the right time. And sometimes it's saying, today is a great opportunity. And other times it's saying, today is a great opportunity to get out of the way. You have to know, right? You have to look at the chart and you have to read it like music. Right? When you started 6th grade band, when you're trombone, just like I didn't know what the music notes meant. But by the end of the year, I had a decent idea. And after I played it all the way through college, I was pretty good at it. And this is the education path that you need to go on. How to look at these charts and how to read them. I really do try to simplify things. But yeah, having those predictions, in my opinion, is so problematic.
Realistic to see how some of his impressionable audience would follow his not advice. Now, this is just one of the most blatant examples, but all of these personal finance personalities is guilty of giving this not advice pieces of advice throughout their content. This can range anywhere from invest into dividend stocks all the way up to buy a duplex and rent out the other side. Both pieces of advice are not necessarily bad, but are grossly overgeneralized and make no accommodations to the financial situation of their viewers. Now, my friend Richard over at The Plain Bagel actually made a video last week that explored the issue of picking stocks and why he doesn't offer stock picks. On its surface, this should be taken as a bit of wisdom, considering it is his literal career to analyze investments, and he also has taken the lucrative test to become a chartered financial analyst. I was actually considering not making a video after seeing that one because I thought Mr. Bagel did a pretty fair and well-rounded argument against all of this. But then I saw this.
We see these kind of videos all the time. These 3 stocks will make millionaires by the end of the year. $75 in this one stock and you can quit your job. I see this constantly. And so I love to watch these videos and do reactions on them because it's like, where are you getting this from?
All right, this is where the serious issue starts. Making up new rules for people to follow. I hate to break it to you, and I truly do mean this in the nicest way possible, but Graham Stephan is an ex-real estate agent and a social media influencer. He does not know the 5 best investments to make you rich. For that matter, nobody knows any investments that will make you rich, and if they did, they sure wouldn't be sharing them on a YouTube video. Despite popular—
Well, I like to share mine because I'm doing this anyway. In fact, I've been doing this for years. I've made over 2,000 videos. Welcome to the channel. I'm glad YouTube decided to put this in front of you. I've made over 2,000 videos of me looking at stocks, taking trades, making money, and losing money, right? And to that point, I'm doing it anyway. I might as well put it on YouTube. That was my thought originally when I first started my company, which is I'm already making these trades. I think somebody could probably use the same information that I'm using, and I'm going to put it on the internet. Maybe people will like it.
Popular opinion these days, good investments should not double overnight. They should instead continually provide value over many years or decades and return that value back to the investor over the same time period. The generally accepted rate of return for a well-diversified portfolio is anywhere between 6% all the way up to 12% if you are doing really well. The bad news here is that it's not going to make you rich, just like we said at the beginning of the video. Well, actually, it's not going to make you rich unless you have a decent income already and are very disciplined about consistently contributing to this portfolio over a long enough time period for compounded interest to do its thing. Even then, it will make you old and rich, which is not what people want. I
recently saw this video the other day. It said, if you make $25,000 a year for 40 years, you've made $1 million. But does that make you rich? The answer is clearly no. If you're making $25,000 a year and you're doing that same job with no raises or anything over 40 years, you're not rich at all. But if you made the same $1 million in 1 year, would you say that you're rich? A lot of people would say, yeah. And so it's the time factor. If you can condense your earning potential from 40 years down to 1 year, you are now 40 times more valuable to the marketplace, to your family, to everywhere else than you would be otherwise. So in my opinion, you need to get rich as fast as you possibly can. In fact, this very morning, I was talking to my parents on the phone and I said, I really wish that I had gotten rich a lot sooner so I could have given you guys a better life earlier. This very morning, I said that to my parents. And I fully believe that. So in my opinion, your job is to get rich as fast as humanly possible and then enjoy it for as long as you can and share that wealth with as many people as you can along the way. Create jobs, create new opportunities for people, right? And you can't do any of that. You can't be a philanthropist. I want to be a philanthropist when I grow up. I can't even say the word. Like Mr. Beast. When Mr. Beast goes and he buys new legs for people in South America, I want to do that. I love that. That is one of my goals in life. And I cannot achieve that goal in my life until I get wealthy enough to be buying legs for people in a different continent. So in my opinion, you need to get rich as fast as humanly possible. Controversial opinion, I know.
Do want is to hear about how the people talking to them got so rich, which is where we get the last type of concerning content. Personal stories about their success. Now, who doesn't love a good success story, especially when it's the tale of a scrappy underdog proving all the naysayers wrong, which is something most of these guys have. Graham didn't get into college, Meet Kevin started from less than $1,000, Dave Ramsey went totally bankrupt, and the same is true for the rest of them. None are turning around and saying I studied like crazy through high school, got into a good university, and became a doctor or an investment banker.
Oh, I'll give you a little personal story for me. Worked in corporate finance, saved a buttload of money, had some really great real estate investments that we bought with life insurance from when my father-in-law passed away. And because of that, I have a multi-7-figure net worth. I think I'm doing all right. So there you go. But I don't talk about that kind of stuff because it turns people off. It really turns people off when they see somebody who has a financial education channel and he shows his bank balance every day. People don't want to see that. And I don't talk dollar terms, I talk percentage terms. And here's why I talk percentage terms. Because my floor could be your ceiling, or my ceiling could even be your floor. But the concepts are timeless. Percentages are always true, right? You could have a 20% gain on a $20,000 account or a 20% gain on a $20 million account following the exact same principles. That is what I want to get across is principles. I hate it when people talk like, oh, I want to make $4 million this year. Well, good for freaking you. I want to make sure that I get as much gain as I possibly can. That's where my head is at.
Why? Well, because their backgrounds are much more relatable to the average audience, which makes achieving fortunes for that audience sound much more attainable. Now, that's not to say that these backstories are all a lie, but more so that they are just the product of survivorship bias. For every Dave, Graham, and Kevin, there are thousands of people that didn't have the unique set of skills and the luck to break into the incredibly lucrative roles they found themselves in. Sure, Graham didn't go to college, but he did work his way into an incredibly prestigious real estate firm. So, what he lacked in book smarts were obviously made up for with personal branding and good old-fashioned sales ability. If you are a fantastic salesman, then sure, go ahead. There is actually a widely accepted array of high-paying jobs with varying levels of effort to certainty. Sales sits somewhere towards the riskier side of this array. Something that is very high effort would be becoming a surgeon or dentist. It takes years and years of medical school, but once you are practicing, you are all but guaranteed a high income and a standard of living for the rest of your life. Of course, at the other end of the spectrum is something like becoming a rock star, famous actor, or yeah, even a YouTuber. It doesn't take too much effort when compared to years in med school or 100-hour weeks in an investment bank, but it's also incredibly unlikely to pay off. Whether they do it intentionally or not, the personal finance personalities perpetuate the narrative of dropping out of school and building your own destiny, which has worked well for them, but will not work for most people. It also sounds eerily familiar to the promises made by the more despicable side of the financial gurus.
Drop out of college.
Now, there is one last problem with all these personal backstories, and that is that they are used to justify all these other pieces of content. To demonstrate this, we are once again going to pick on Meet Kevin. One of his most popular videos is the tale of how he built up his property portfolio from $0 to $5.5 million by the age of 27. You are welcome to go and watch the video, but the TLDR is that through a series of flips and equity releases, he built up a highly leveraged position of real estate assets that were cash flow positive. Sounds great, but it is incredibly risky. Take a 5-to-1 leverage position in the stock market and most people will think you lost your mind. But take a 10-to-1 leverage position on a house and you're an investment genius. Most people don't realize how risky real estate can be. Now, of course, Kevin was lucky. He started...
Dude, all investments can be risky. They can be. And when it comes to stock, right, you have two insurance policies. Number one is your position size. Number two is knowing where you're going to get out and then holding yourself accountable to get out when you say you're going to get out. That is how you manage risk in the stock market. That's how I've been able to grow a giant account that I love to trade and I love to share with you. It's because, yes, I did have losers, but those losers were small because I position sized correctly and I knew where I was going to get out.
Investing at the start of one of the longest real estate bull runs in history, and in his defense, he has since leveraged his position significantly. But this is the definition of survivorship bias. Nobody is going to make a video of how they lost their life savings trying to flip homes. Had Kevin started his investment journey in 2004,
I talk constantly, all the time. I blew up 2 trading accounts. I lost $200,000 trading. How's that sound? Does that sound great? It sucks. It super sucks. But it's because I had those losses that I learned so much and that I share so much. I love stock trading. This is why I was put on earth, was to get as rich as I possibly can to then go out and be a philanthropist, even though I'll never be able to say the word correctly. And I love it. I love it so much. And I'm grateful that I can spend a few moments with you right now, that you can be a part of this too.
He certainly wouldn't be telling stories of financial success on YouTube. If anything, he would be lucky to be an extra on The Big Short.
You just keep going to the bank and you ask for more money. Hey, there's a bubble.
Now, if I sound overly cynical, let me follow all this up by saying that given the opportunity to make as much money as these guys are by uploading videos to the internet, I would sell out so damn fast.
Sometimes YouTubers can sound like salespeople.
But they are still selling something. It might not be a course or an AI that can trade Forex for you or even a book, but they are selling you to keep on watching.
Well, absolutely. First, please do like and subscribe. Also, if you're interested in Outlier and everything that it has, I would highly encourage you to go check it out. but I will make sure my damnedest to give you every bit of value I possibly can in a free YouTube video twice a day, every day. I hope that's not too much to ask. And when you do find some value, when you do make money, and I love sharing these stories of people who are making money or not losing money that they thought they were going to lose had they not followed what we talk about, just tell everybody you know. That is the number one way you can pay me back, is by telling everyone you know that there actually is somebody on YouTube who knows what he's talking about.
Bleak realities about the tough road to reliably create wealth doesn't quite grab the attention like an open mouth and flashy headline. But in a world where attention is the new currency, you should spend yours wisely.
You're watching this video, you're still like, all of this guy's investments is because of his YouTube money. You're 100% right.
Anyway, if you do happen to get rich by following in their footsteps, you should follow that all up by commenting how dumb I am on this video and watching our video on what to do next after making a few $1 million. If you
So yeah, that type of video, I didn't mind. I knew a lot of that was coming. I purposely chose that video because I thought it would be a little controversial. So what do you think? In the comments down below, tell me what you think. Am I giving you enough value? This is not a pat Chris on the back session, but I do want to know, how can I help you? How can I help you? I do this to help you. How can I help you? So let me know in the chat down below. Of course, be sure to subscribe, and I'll see you on the next episode. We'll help you save time, make money, and start winning with less risk.
10 over 20, over 50.